Today on the Blockchain Report, Bitcoin's hovering around 113K, and it might be because a bronze statue of Donald Trump holding hands with Jeffrey Epstein popped up in Washington, D.C., because apparently protest art is now performance trolling with a permit. Build-A-Bear stock has outperformed Bitcoin. Yeah, teddy bears and tiny outfits are beating the hardest money on earth. And the SEC wants to fast-track crypto products with something called an innovation exemption, which sounds less like policy and more like a rejected Netflix docuseries. All that and more right now in today's show. Let's go! Good morning, my beloved Bitcoiners, and welcome back to another episode of the Blockchain Report. I'm Hank Hudson, coming to you live from San Francisco, where the fog is thick, the coffee is overpriced, and the only thing more inflated than housing is the price of Burning Man tickets. It is Wednesday, that magical day when you're halfway to freedom, but your portfolio is already begging for mercy. Now, before we belly flop into today's headlines, packed with the ETF whiplash, regulators cosplaying as referees, and billionaires doing performance art and social media, do the thing, smash that like button like you're rage-quitting Coinbase tech support, and remember to follow RoxomTV and me at Hank at RoxomTV, because if your financial strategy is still based on Discord leaks from a 17-year-old with anime PFPs, you deserve every rug pull that's coming your way. All right, now it's time to fire up this morning's market rundown, see who's pumping, who's dumping, and who's still pretending Gary Gensler's ghost is haunting their liquidity pool. Let's take a look. All right, so today, Bitcoin on the ups a little bit, seeing a little bit of a gain this morning, almost 3.75 of a percentage point. We're up around that 113.5 arena. We were as low as we saw as about 111-ish in the last 24 hours, but things are moving up, so we're liking it. Let's see what's going on in the rest of the cryptoverse this morning. We got time for that, gang? Let's see, we got him here. Here we go. So yeah, we got Bitcoin sitting in the mid 113s. We have Ethereum hovering just beneath that $4,200 mark, but it's been holding strong in the $4,000 level for some time now. And we got Solana. It had been the belle of the ball recently. It was up all the way to around 250 just a couple of days ago, but we are back down to around 215. Let's take a peek and see how things are looking in TradFi today. The Dow Jones is up a negligible percent, barely 0.2. We got the S&P 5 is up 0.1% itself. The Nasdaq Composite's right around the mid $22,000 range. And last, we have MicroStrategy up almost 2.5% this morning, sitting around 335 a share. So we got a lot to do this morning. We going to break? Yep, we're going to go to break first, but when we're back, we're going to get to today's top stories, and we've got two special guests joining us here today to talk shop, so make sure to stay tuned for that and much more in the Blockchain Report, coming right back after this.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Good morning and welcome back to this morning's Bull Run. And joining us for our Bull Run today, we have our first of two special guests. And our first guest, well, he went from stacking gold and real estate to stacking sats, and he hasn't looked back since. He's built a massive following as one of the sharpest, loudest, and most entertaining Bitcoin voices online, with a mission laser-focused on turning normies into whole coiners. Let's give a big Blockchain Report welcome to the one and only British Hodl, everybody. Welcome to the show. We and our audience here are super pumped to have you. Britt, how are you this morning? Thanks for joining us.
I'm excellent. How are you? Can you hear me?
I can. You sound great. We're pumped to have you. And before we get started with today's news, Britt, tell me a little bit about you, your background, your channel. We want to learn more before we get started here.
I'm an investor. I started off very young, working alongside my dad. Started in real estate, and then moved over to equities, and then kind of understood what was going on with the way the world works when it comes to the fiat money. And that was because my first ever recession in business was 2008. It was quite a learning curve, and then got into gold, and then always thought Bitcoin was a scam. And in 2020, my eyes were opened as a result of reading the Bitcoin Standard and a friend telling me I had to read that. And then moved over to Bitcoin and been focused on Bitcoin ever since.
Nice. Well, we're super excited to have your insight and experience and expertise with us on the show today. So what's going to happen now is we're going to read the first story. As soon as we're done with it, we're going to bring you right back and chat about it. Sound good?
Perfect.
All right, let's rock and roll. First up today, we got the SEC. You know them, the agency famous for dragging crypto firms through regulatory mud. Well, they now want to speed things up. Chair Paul Atkins says the SEC plans to introduce an innovation exemption by year's end. This would let new crypto products hit the market quickly. Yeah, we are talking about the same SEC that took years to approve a Bitcoin ETF, and they are now suddenly talking about fast tracking. Atkins went on Fox Business and said the agency is working full steam ahead on digital asset rules. Since taking over in April, he shifted the SEC to a noticeably friendlier stance toward crypto. In June, he told staff to explore the innovation exemption, letting firms launch on-chain products faster than before. He also launched Project Crypto to modernize the SEC's dusty old rules for digital assets. So that's right, the SEC now has a project name that sounds like a bad Netflix docuseries. Meanwhile, lawmakers in Washington are also at work. They passed their first crypto-specific bill covering stablecoins. And both House and Senate now have their own versions of the broader market structure bill. The White House expects a final unified bill before the end of the year. Now, Atkins said he's looking forward to Congress acting on it. He was also asked about combining the SEC and CFTC. That idea is floating around social media like a bad meme right now, and Atkins basically said, no thanks, his hands are already pretty full. But he did say the SEC is working hand in glove with the CFTC, which is regulatory speak for we're at least on speaking terms now. Now, both agencies are even holding a roundtable next week on bringing novel crypto products back to the United States. So yeah, the SEC is suddenly branding itself as pro-innovation, and if this really happens, Bitcoin benefits most. We're talking faster approvals, more liquidity, and fewer years wasted waiting for the SEC to pretend it's still studying the issue. We're bringing Brit back. Brit, the SEC, famous for moving slower than dial-up internet, now claims it wants to fast-track crypto products. Do you actually buy this sudden personality transplant, or is it just rebranding the same red tape? What do you think?
No, I think this is a major step in the right direction for U.S. regulators. There's a one advantage that the U.S. really has over my country, the United Kingdom, because when we elect a new prime minister, the bureaucrats stay the same. When the president came in and decided that he was pro-Bitcoin, suddenly everything changed. He can fire the right people, he can bring in the right people, and things can actually get moving. It's one of the huge advantages that America and American innovation actually has. And so, yes, I think this is absolutely real, and I think they want to make the United States a center for Bitcoin and unfortunately crypto innovation. I have to say that as a maximalist. So it is very, very good news, and I'm very, very positive on what's going to happen in the US as a result of this move and all the future moves that are coming.
Okay, well, I'm encouraged that you're feeling positive about the moves and you're not just thinking it's a little bit of lip service right now. As Paul Atkins is floating this innovation exemption to get new products live quickly. Now, Brett, if this really happens, what's the first Bitcoin product you'd want pushed through the chute after this new regulations or, kind of take place here? What are you thinking?
Yeah, I think securitized loans on Bitcoin in banking custody. I think that's probably the biggest one and the biggest unlock that we need to see at this point. I think there's a large rotation going on right now, and I started speaking about that probably a year and a half ago, that it was going to come at 100,000. And I think that if you had some kind of way to borrow against your Bitcoin in custody at Goldman Sachs, for example, I don't think you would see as large of a rotation that's happened with people taking profits. So that would be the first thing that I would like to see, and it seems to be coming down the pipeline quite quickly.
Okay, well, that's encouraging. I feel good about that. And regulators are saying that they're working hand in glove with the CFTC now. So, Britt, in your view, is that progress, or are we just talking about two different bureaucrats holding the same rubber stamp here? What do you think?
No, it's major progress. I mean, look, the one thing that you can give, at minimum, this administration credit for is the fact that they've overhauled this and made crypto an absolute priority. And obviously, David Bailey and the rest of all of the people that were involved in making sure that the Bitcoin lobby was strong and powerful, are also due some credit as well. So, yeah, this is really good. The problem is that Bitcoiners that come from just Bitcoin or just crypto don't understand that it takes time to move political things. And so
Right.
this, he's been president since January 21st of this year. I think we're gonna, I think over the term of this administration, you're going to see remarkable things happen because I think ultimately, they've realized that this is the way to extend the life of the US dollar, and they're gonna make it happen one way or the other. So a lot of exciting things yet to come. I don't believe it's just lip service. I think they're actually lining this up to strengthen the US dollar in ways that the absolute normie can't imagine.
And big picture here, if the SEC suddenly becomes very friendly, does that truly accelerate mainstream Bitcoin adoption? Or is there any part of you that maybe worries that it opens the door for Wall Street to kind of dilute Bitcoin's ethos with endless ETFs and other synthetic products?
Yeah, I mean, look, I've been shouting about people getting to one Bitcoin now for 3.5 years. And I said that a day would come where the price would be too much and then your holding would be insignificant. I don't think that, an individual holding $5,000 of Bitcoin is significant in any way when it comes to the policy of Bitcoin. The time to become someone who was going to be significant for the majority of people has run out. Even to get to one Bitcoin, I don't know people, I don't know people who have got 3, 4, $5 million property portfolios and net worths right now that have, 115, $120,000 to get into a whole Bitcoin spare liquid. So look, time is time. At the end of the day, I've been shouting about it for long enough. Bitcoiners have been trying to tell people for long enough that you've got to get a significant portion of this asset. And if you haven't, time's run out from that perspective. Now we start focusing on people, and even I've started focusing really on people with significant assets and urging, and educating them to understand Bitcoin, to protect the value of those assets, like my parents, for example, right? That was my first cause of concern when I started my content. And so it's now up for people like that. I think if you're sitting around, and I call them happy hippies, if you're sitting around going, I've got $2,000 of Bitcoin and I matter, unfortunately, you don't. This is a Wall Street game at this point. This is a BlackRock game at this point. And that is where the revolution is going to come from. And Bitcoin is the best private banking asset that humanity has ever created, and ever seen. And I've heard this from the mouths of private bankers in 3 different countries. So this is a private banking asset, and it's going to revolutionize how private banking works. The one positive of this is that we may see housing prices cool off, not necessarily maybe go down, but certainly cool off compared to wage growth, and that will make housing a lot more affordable over the next decade, which will be a good thing.
Yeah, we can only hope we're not living in the days of our parents where they bought their house for like $100 and a couple blueberries or whatever. So yeah, we need to see those housing prices come down quite a bit. That'd be great. All right, we got more to talk about on this next story here, Britt. So hang 10, we'll be back with you in a sec because Deutsche Bank says central banks will hold Bitcoin by 2030. Yeah, the same Deutsche Bank that once helped launder half of Europe's sketchy money now wants to tell you Bitcoin is the future of monetary reserves. According to their new report, Bitcoin will cozy up right next to gold on central bank balance sheets like the cool new kid at the retirement home. For now, the US dollar still hogs the spotlight, making up about 57% of global reserves. China already dumped $57 billion in US treasuries last year because nothing says diversification like lighting your dollar stash on fire. Deutsche says don't expect Bitcoin or gold to dethrone the dollar anytime soon. The U.S. is working overtime to keep the dollar king with monetary policy, financial market depth, geopolitical muscle, and of course, the genius idea of dollar-based stablecoins. Meanwhile, Bitcoin is apparently retracing gold's adoption arc. Both are scarce, both make gold bugs furious because Bitcoin's basically doing their whole act better, and both are where people run to when the world catches fire. Gold has an estimated 277,000 to 299,000 tons just floating around in vaults, jewelry, and your grandma's teeth. Bitcoin, we know it's capped at 21 million, and scarcity, it wins every time. Deutsche even called Bitcoin the 21st century gold back in March, which, let's be honest, is the nicest thing a German bank has said about anything not denominated in euros or the ill-fated Deutsche Mark. And then, as if it were on cue, gold hit an all-time high of around $3,748 an ounce this past week. Peter Schiff naturally popped champagne and said gold's going over 4K, all while predicting Bitcoin is heading under 100,000. Which is adorable considering Bitcoin is still sitting near that 124 level after its big crash. We're like 113, 114 right now, so not too far off. Now, Deutsche's report also reminded everyone that companies already treat Bitcoin like a reserve asset. Strategy, Tesla, and even Metaplanet have turned their balance sheets into crypto fan fiction. Trump even went full send with the U.S. Strategic Bitcoin Reserve, pushing lawmakers to formalize it under something literally called the Bitcoin Act. So yeah, gold keeps the boomer crown for now, but when central banks finally admit they need Bitcoin on balance sheets, Schiff's gold coins are going to look a lot like Beanie Babies. All right, we're bringing my man Britt back. Britt, Deutsche Bank, the same guys who laundered half of Europe, now says central banks will hold Bitcoin by 2030. Should we be celebrating, or is this like asking the fox to guard the hen house? What do you think?
Well, I guess it depends on how much you understand money and how money works. If you're someone who's sitting there with delusions on how money works, then you should probably be shitting yourself. If you're someone who understands how money works, how capital flows, and things like that, you should be absolutely celebrating here because the banks tell governments how to work. And if they're telling us and they're telling governments and they're projecting out there, like Larry Fink did sitting at Davos and basically looked the interviewer in the face and said that nobody should be surprised if Bitcoin's $700,000 a coin. There is a layup coming here. And if you're smart, you understand how to read financial news, you understand how to interpret what the movers and shakers of the actual earth are saying, then you should be jumping for joy right now if you are a Bitcoin holder.
Mm-hmm. And Deutsche even said that they compared Bitcoin to gold, and they said that both are scarce and used when the world catches fire. Britt, do you think Bitcoin actually replaces gold in reserves, or do the boomers continue clutching their Krugerrands to the grave? What do you think? Is it too late for them?
Well, it doesn't matter what I think. What's important is, as Charles Schwab has highlighted in their reports, $60 trillion of wealth is being passed over to the next generation over the next 20, 25 years. And that amount,
Right.
what we can clearly see in that data is that the new recipients of that wealth are not interested in holding gold in the same way that the previous generation was. So they are selling down their gold. They're buying the new gold. The new gold is Bitcoin. It's digital gold. And that's what's going to happen. So, and by the way, not going to happen, that's what is happening. So it's very important to see these trends. This is a long-term story. It is not a one year thing that can happen. So you've got to sit there, be patient, understand how capital flows over time, and it's very clear to see what's happening here.
Yeah, I mean, and we have China, right? They just dumped $57 billion in treasuries last year, which kind of begs the question, Britt, if central banks start rotating into Bitcoin, how seismic could that shift be for Bitcoin's price?
Yeah, I mean, look, at the end of the day, Bitcoin's price is set at the margin of the supply. So, it's not based on 21 million. It's based on what's available to buy and the daily demand. There's a multiplier effect on the daily demand based on the daily supply. Right now, we're going through a period of heavy daily supply into the market. That's going to be sucked up, and it's being sucked up. And once that slows down, you're going to see, you know, does the daily buying increase? And if central banks are buying, absolutely the daily buying going to increase. And of course, not only are people going to be hodling their Bitcoin, but then every 4 years you've got the supply going down by half. So it's basic maths. If the demand in fiat dollars and fiat money continues to go up, but the supply continues to go down, then the price is going to go vertical.
And Britt, we're at this interesting, I think, kind of inflection point with Bitcoin, right? Because for the longest time, it's been acknowledged as a risk-on asset people are fleeing to, when there's lots of money or cash available. But also, it's very often compared to being digital gold. In fact, Deutsche called Bitcoin the 21st century gold. So it begs the question, do you agree with that statement? Or is Bitcoin something fundamentally different that we shouldn't even be comparing to that shiny metal object?
Well, there's two questions there. Do I see it as a risk on asset or a risk off asset? As a Bitcoiner, I see it as a risk off asset. As an investor in the capital markets, I see it as a risk on asset because the only risk off asset is US dollars. As far as central banks and their perspective on what it is, I think it's a great narrative, and I think it will work, and I think it is working. And at the end of the day, gold is it's finished, right? The gold was serving a purpose of scarcity. Bitcoin has come along. Not only is it scarce, not only can you build on it, but it is absolute pristine capital that can move at the speed of absolute light and thought. And that is where the world's capital markets will move to.
Yeah. I mean, it's a tale as old as time, right? A new technology comes, replaces the old thing, and that was the way of the horse and carriage. So, yeah, I think the Bitcoin's the new monetary car or vehicle for all of us out there. And, Britt, when central banks finally end up putting Bitcoin on their balance sheets, what do you think happens first? Does Peter Schiff's head explode, or are governments everywhere, do they start racing each other to accumulate as much Bitcoin before it's gone?
Well, I've stopped worrying about Peter Schiff a long time ago. It's one of the things that frustrates me with Bitcoiners. It's like, why are we even caring what Peter Schiff has to say? And of course, he does everything he can to monetize and milk the attention that Bitcoiners voluntarily give him. I don't. So I don't worry about what's going to happen to Peter Schiff's head. I wish him well. I think a game theoretic outcome here is very simple. It's all central banks start moving to acquire as much of this asset as possible. And the US is doing a very, very smart thing. They're basically encouraging US listed companies like Strategy to acquire as much Bitcoin as possible within US borders. And then hopefully, if they get the strategic Bitcoin reserve actually active, then that will also start acquiring Bitcoin in US borders and under US jurisdiction. So, everyone else will be competing with the US to acquire as much Bitcoin as possible. You just saw one of the advisors to President Putin of Russia coming out and saying that they're basically going to use crypto to, further extend the life of the US dollar. And that's exactly the game plan. I started saying that over a year ago, and it makes the most amount of sense for the US to do this, just from a game theory survival perspective.
Yeah, and we're already starting to kind of see other nations turn their attention toward Bitcoin, even if they're not actively acquiring it natively through other vehicles to give them that exposure. And we're going to talk about that right now. So hang 10. We'll be back at the end in just a sec, Britt, to chat. Because Norway's sovereign wealth fund, also known as the oil fund, also known as the world's biggest piggy bank, has jacked up its Bitcoin exposure by 83%. Standard Chartered combed through the SEC filings and found that Norges Bank Investment Management has been stuffing its balance sheet with Bitcoin ETF holdings. Yeah, the same Norges Bank fund with $1.7 trillion in assets. Now, technically, they aren't holding raw Bitcoin. Instead, they're hoovering up Bitcoin ETFs and companies with massive Bitcoin treasuries. It's the classic institutional play, really. We want Bitcoin, but we want it with training wheels. Still, that 83% more exposure than before, which helped push Bitcoin to that 124K price high that we saw just a couple of weeks, was it maybe a month ago now. So even as crypto prices slipped 1% and Ethereum dropped like 4% at the time, recently Bitcoin has stayed pretty strong overall. The Ethereum Bitcoin ratio dipped under 0.039, which means investors are are dumping ETH and rotating into Bitcoin as the real hedge. Binance's Catherine Chen put it bluntly, saying Bitcoin is now a macro-sensitive asset influenced by central banks and monetary policy, not halving cycles. The bulk of Norway's Bitcoin exposure comes, of course, via Strategy, the company formerly known as MicroStrategy. Michael Saylor founded it back in 1989, ran it as a boring software shop, and then in 2020 turned it into the Death Star of Bitcoin accumulation. They now hold over 630,000 Bitcoin, I believe, and they are still very actively acquiring. Norway also bought into Metaplanet, a Japanese company that pivoted from hospitality to hoarding BTC. Metaplanet is now the 10th largest corporate holder worldwide and the biggest in all of Asia. They're aiming for 1% of all Bitcoin holdings by 2027, which means around 210,000 Bitcoins. Is this ambitious? Yes. Is it insane? Also kind of yes. Norway's sovereign wealth fund is actually split into two parts though. One is the smaller government pension fund, Norway, which is tied to domestic companies and created back in the 1960s. The other is the global fund, the $1.7 trillion monster created in the 1990s from oil revenue, surpluses, taxes, and drilling licenses. That's the one buying the Bitcoin exposure. It invests globally. We're talking real estate in New York to blacklisting companies it doesn't like. So if the world's most conservative fund manager is loading up on Bitcoin proxies, that tells you something. Institutions are watching, and other countries are too. And sure, this is just a dip in their ocean of trillions, but even small splashes from funds this size can push Bitcoin into another bull run. All right, we're bringing British HODL back. Britt, Norway's oil fund, the most conservative investor on earth, just increased its Bitcoin exposure to 83%. Does this feel like a turning point for institutional adoption, or is this just another baby step along the way?
I think they increased their position by 83%. That's very different to saying that 83% of the fund is in Bitcoin. So we got a long way to go. It is an absolute step in the right direction. Any smart sovereign fund will be looking for Bitcoin exposure. Abu Dhabi's done the same thing. So, I mean, it's a great move. And Norway will do right by its people by doing this and continuing to do it.
Yeah. But as we're seeing still from like a lot of, institutions and now governments seemingly, they're mostly buying Bitcoin ETFs and treasury companies instead of raw Bitcoin. Is that cowardice? Is that smart risk management? Or is this just training wheels until they're ready to actually self-custody their own orange coin? What do you think?
Yeah, I mean, I'm speculating, but I think it would be a combination of everything. I think they're going to see the advantage of having U.S. securities. I think they're going to see, the advantage of learning how this asset works and having exposure in the interim. And then I think ultimately they will hold Bitcoin in sovereign self-custody.
Yeah, it seems like an inevitability. Everybody's just kind of dipping their toe in the orange water right now and seeing how the temp is. And in the story, we mentioned that Catherine Chen over at Binance said that Bitcoin is now a macro-sensitive asset, not just a halving story anymore. Do you agree that Bitcoin's future is tied to central bank policy more than its own code now?
Absolutely. Once an asset gets big enough, if we're pricing it in the underlying fiat currency, it's going to be a macro story.
Mm-hmm. Yeah, I think so too. So we'll see how that all plays out, but I think it's going to be good. All right, so we got through our stories here. Now it's time to get into our deep dive. So let's roll the stinger, boys, and get into it with British. Let's go. There it is. All right, welcome back. Now we're getting into our deep dive with our guest today, British HODL. Britt, I want to start at the beginning. You started out in gold, equities, and real estate. You mentioned a little bit about it earlier. I mean, kind of the holy trinity of boomer assets, if you will. Tell us a little bit more about how you were eventually pulled away from all of that and decided to go all in on Bitcoin. Like, how were you introduced to Bitcoin? Was this your own research? Was it like your buddy told you about it and then you started diving in? Give us that line. What was that orange pill story like for you?
Yeah, you're kind of always around new and emerging assets when you're involved in investments, but I just always thought Bitcoin was a scam. The small group of highly capable investors that I surround myself with and have for years. Always thought it was a scam. And then during, the 2020, 2019 flu season, worldwide flu season that we had, a friend of mine called me while I was walking around a park in London, and he said, "All right, I don't want you to speak until you hear everything I'm gonna say. Uh, I'm about to allocate to Bitcoin, and as I'm about to, send him some expletives, he says we're not going to talk until you've listened to the Bitcoin Standard by Saifedean Ammous." And then hung up on me. So I'm on Audible. I download the book and start listening to it. And it was the next day when I got to the part of the book that started talking about the idea of stock to flow, not the stock to flow price model or anything like that, but just the idea of applying stock to flow to Bitcoin. And having a gold background at that time, I kind of had this moment where the matrix sort of lined up, and I realized that I was completely looking at Bitcoin the wrong way. I was looking at it like an equity, and I should have looked at it as a commodity. And the moment that happened, all panic set in. The scarcity argument made absolute sense. And I downloaded my Coinbase account that I actually had already because a few years earlier I had, bought a bit of Bitcoin sitting in a cigar lounge, sold it 2 weeks later after doubling my money, and spent it on cigars. So I downloaded that Coinbase account immediately as I was walking home and started wiring funds to buy Bitcoin. I probably moved 20 or 30%. This was probably in March or April of 2020. Moved 20 or 30% of my gold position by May, and by November, all of the gold was gone.
So that's an interesting story, and I would love to get your perspective then, as someone who was into gold, got into Bitcoin. You had a great friend who made you listen to everything you had to say. We all deserve a friend like that. Where do you stand in terms of like gold right now? Like, it sounds like you have removed everything from gold. It's all in the Bitcoin. Where do you see gold going? Because it's at all-time highs right now. Are we going to see that trend continue, or is Bitcoin slowly but surely going to continue eating some of Bitcoin or gold's lunch for it? Where do you see it going?
Yeah, I highly regret selling all of my gold and buying Bitcoin at an average of $5,000 a coin just 5 years ago. And now that gold is up like what, 50%. I so regret it. Like every day the gold price keeps going up. I'm just regretting selling all of that gold and buying Bitcoin at $5,000 a coin. It's just one of the biggest regrets of my damn life.
Yeah, you seem really, really broken up about it. But now you've made that transition from gold to orange, and you're preaching the gospel. And one of the big things I saw when I was doing my due diligences is you've made this kind of idea of creating whole coiners very much part of your mission. So my question to you is, Britt, why focus on that milestone? Like, what's so powerful about convincing people to own just one full Bitcoin?
Yeah, look, when I understood Bitcoin, the next few days I spent talking to people who I cared about. And one of the, my parents, I care about them a lot. I think they've done the right thing. They immigrated to the United Kingdom. They followed all the rules. They built a property portfolio to take care of their two sons. And then every single year, they just get the rug pulled out from underneath them with the amount of money that's printed, and how that, how property is also a very, very controlled asset in terms of supply. And I
Yeah.
was walking around this park, and I'm looking at it backs on, all these houses around the park back onto the park. And I was just thinking, like, every single one of these people is screwed. And so, when I started thinking about Bitcoin and getting into Bitcoin and looking at Bitcoin content, what I realized was there's a lot of people trying to take care of poor people in Bitcoin. The issue that I saw was that the wealth that's actually being held by people like my parents, the $500,000 to $30 million net worth person, was not being spoken to. And these are the people that actually have the biggest problem, because it's all well and good saying, you're broke, you've got, $1,000 of net worth. Maybe you should get into Bitcoin. That's cool. And it made a big difference to people, but there was enough people covering that. What wasn't being explained was if you've got $5 million or $10 million in real estate, why you need Bitcoin. And my goal was always to save people like my parents. There was always enough beautiful content being created trying to help, the person who wants to save 50, 60, $100 a month into Bitcoin and DCA. My goal was on a different target, and I want to help the people that have sacrificed their entire life to build a property portfolio or an equity portfolio or build a business to take care of their families, done the right thing, been upstanding citizens and are now being completely and utterly rugged, understand that the game is about to pivot. And so that's what I focused on because that's what I cared about.
Yeah, no, that makes a lot of sense. And it sounds like you did a nice job of identifying this kind of untapped pool of people that need this information. But with that being said, right, as you mentioned earlier, you yourself thought Bitcoin was a bit of a scam when you first heard about it. So my question to you is, when people hesitate about buying Bitcoin, as you're talking to them about it and they haven't done it yet for the first time, what's kind of your go-to move to push someone past the doubt and then get them to actually start stacking, even if it's slowly?
Well, I don't believe in slow stacking, so it's full aggression from day one once the penny drops. But nowadays it's quite interesting, right? Like when I first started talking about Bitcoin publicly, it was a very different situation. Nowadays, you don't really feel that much resistance. If they have the cash, they do it. Whether they do it in IBIT or spot or whatever, they do it. They get exposure very quickly with half of a conversation because you know why? Because these people realize that they have a problem. And that's what I've realized. The people that I speak to understand that they have a problem. They understand they're getting screwed. They understand what Michael Saylor understood, which was he's sitting on this melting ice cube. And the problem is now bigger than ever, especially if I'm talking to people from Europe, from all different parts of the United States, from all different Western economies that have built all this wealth up and are now seeing it completely destroyed by the policies that their governments are putting into effect. They're very open to Bitcoin. So now the conversation's slightly changed. And to be honest, anyone who doesn't get it at this point, I take Satoshi's famous quote, which is if you don't have the time to understand it, I'm summarizing it, but if you don't have the time to understand it, I don't have the time to explain it to you. You got BlackRock in the game, you got the president of the United States in the game, you got the entire C-suite of the most powerful economy in the world buying Bitcoin. If you do not understand it at this point and think it's a scam, you're the problem.
Yeah, it reminds me of that was that famous Michael Saylor quote. We all get Bitcoin at the price we deserve. And if you're not paying attention to all the amazing things that are going on right now in the Bitcoin ecosystem, that's kind of your fault. So I agree with that. And through your messaging, you have built a massive platform on X and Twitter. I mean, you got like 800 videos about Bitcoin. How did that start? Was that right when you decided to go all in and you found this untapped audience that needed this information that you said, hey, I'm going to start producing content? Or how did that happen?
Yeah, it was, I was always talking I found this Clubhouse community on Bitcoin and many friends on there for a year and started building that up. I was completely anonymous at that point. And then a Christmas happened, and I was like, what am I actually going to do with this? And is the mission still important to me? I've been very blessed in my life to be surrounded and have the pleasure to be, surrounded and inviting success for a long time. So that was all taken care of. I didn't have to really do anything else. But what I realized one Christmas was that what the hell else am I going to do with my life if it isn't trying to save these people that really need to get this message? And if I'm the only vessel that can actually deliver this message, or if I'm one of the vessels that can deliver this message, then I should be delivering that message. Otherwise, I'm probably not serving the higher power of what I'm here for. And so, one of the biggest rewarding things that I get is messages from people saying that they actually got to 1 Bitcoin, or they, pivoted a sizable amount of their net worth, and they're, in a much better position as a result of that. And their children are in a much better position as a result of that. That's very, very rewarding. And I had made a commitment to myself that, I've probably got the only channel that doesn't have any sponsors, hasn't sold anything as of this point. And I made a commitment that if I wanted to do this, then I could, if I wanted to, do it in a way where, I didn't have to take a sponsor or sell a single thing for 8 years and do a video every single day. And that's so far is exactly what we've been doing. So it's been a privilege to get this message out there, this very extremely time-sensitive message out there with the force that it's gone
Yeah.
out there.
Yeah, no, I mean, it sounds like it's not only been effective, but incredibly well received, and your audience, speaks for itself. And do you feel like your audience that you've built, do they see you more as like an educator, an entertainer, an activist in the space, or are you just kind of basically all three rolled into one at this point?
Yeah, I think I'm all three rolled into one. I get hate from different directions as well. And at the end of the day, right now there's no education without entertainment. So you have to be entertaining, you have to be able to articulate a message. And I was, I guess, blessed to the point where when I first started doing this, the message that I wanted to get out there was extremely clear. And that's allowed me to penetrate the noise that's out there on YouTube and everywhere else. So it's worked out quite nicely.
Yeah, and you said you've gotten some hate, but there's a quote from an NFL coach. He's currently the defensive coordinator for the San Francisco 49ers, and he says, if you don't got haters, you ain't popping. So if you got haters, it means you're popping and you're doing something right. So I'm glad to hear that. It's a sign of success where I come from. All right, so
Yeah, I guess
what we're
so.
going to do now, we're running. Go ahead. Go ahead.
No, just agreeing with you.
Oh yeah, let the haters hate. So what we're gonna do now, we're gonna switch things up a little bit here, and we're gonna play a game. Okay, so let's go to camera 3, guys, really quick. So here's the game. I don't know if you guys have Prices Right in the UK, Britt, but we play a game kind of like that here on the Blockchain Report. So let's go to camera 3, guys, and bring up the price chart. They're bringing it up. Okay, so here's the game. After every one of our interviews, we have our guests make a price prediction of where they think Bitcoin is going to be by the end of 2025. So December 31st, the clock strikes midnight, it's 2026. What's the Bitcoin price going to be? This isn't financial advice. It's all for fun and games. And whoever wins, we're going to send a Roxom Patagonia to at the end of the year. And I'm hoping to put it on you. So right now you can see our leaderboard we have up there. I know we got Knut Svanholm has got the big one around like 443, I believe. I'm on the more conservative end. Where do you land in terms of where Bitcoin's price will be at the end of this year?
I think that there's a chance that this cycle slips into 2026. So I'm going to be a little bit more conservative and say somewhere in a region of about 180,000, I think. If we're literally talking
okay.
about the last day of the year. Yep.
Yeah, I think you're right. I do think this rally is going to extend into 2026. We have a lot of different things at play than we've seen in the past. So 180 does feel pretty good. So we're going to put you on the board for that. And hopefully next time we chat, I'll be putting a Roxom Patagonia over those shoulders of yours. But I'm going to have to ask the team to pay for the international shipping for that. All right, so we're going to wrap up here on our time today, Britt. Before we do, though, I'm sure there's a lot of people in our audience who are super interested in learning more about you and everything you're up to. What's the best place they can go to get more information, to get your hot takes, to see your videos? Where can I send them?
YouTube and X. Just type in British Hodl and look for the face.
Amazing. Easy enough. Well, Brett, it's been an absolute pleasure having you on the Blockchain Report. We thank you so much for your time, insight, and expertise today, and we hope to have you back on the show real soon, and hopefully with the Patagonia over those shoulders.
It's my pleasure. Thank you for having me, and best of luck with everything you guys are doing.
Likewise. Thanks so much for your time, and we'll see you real soon. And we here at the Blockchain Report, we're taking a quick break. We'll be back right after this.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, welcome back. It's time for this morning's Bull Run, where we go over the top stories of the day. But we will be joined by our second special guest of the day to talk shop with us. He's the voice behind the Bitcoin Matrix, one of the sharpest podcasts in the space where he breaks down Bitcoin's culture, philosophy, and future with the kind of depth most mainstream media wouldn't dare touch. He's orange-pilled audiences from Miami to the metaverse, scaled his platform into one of the most respected in Bitcoin, and he's never afraid to push the hard conversations forward. Back for round 3 on the Blockchain Report. Let's give a big welcome back to the one and only Cedric Youngelman, everybody. Cedric, welcome back to the show. It's always a pleasure having you. How are you? How you been?
I'm great. Well, thank you. I'm humbled by that really nice introduction. I really appreciate that. That was wonderful. Thank you so much. I'm excited to be here.
Oh,
it's always nice to catch up with you.
Yeah, likewise. It's always a pleasure to have you on the show and get your insights and expertise. And we've got a lot to talk about today. So what do you say we get into it with this first story?
Let's go for it. I'm excited.
Love it. All right, hang tight. We'll be back with you in a sec. But first, President Donald Trump's much hyped major speech at the United Nations yesterday had the crypto market holding its collective breath. This came right after a $1.7 billion liquidation week. Traders were praying for a Bitcoin bombshell to bring prices back. Instead, Trump gave them a rant about energy and immigration. Bitcoin and crypto, not mentioned once. He called a green energy a major hoax, blamed Europe and the US for bankrupting themselves with expensive projects, and pointed to China and its neighbors for actually pumping out the carbon. In Trump's world, the golden age of America is powered by cheap, traditional energy. Ironically, that's bullish for Bitcoin mining because cheap electricity means lower costs, at least in countries that haven't banned miners outright. He also doubled down on borders and migration. Nationalist independence in, globalism, you're out. So while it wasn't directly about Bitcoin, the speech still played into Bitcoin's narrative as the only money that actually ignores borders. But for traders, the hype didn't match the delivery. They wanted Bitcoin moon talk, and what they got was eat coal, not kale. And as the disappointment sets in, the UN General Assembly rolls on. Today, Ukraine's President Vladimir Zelensky steps up to the podium. He's one of the most anticipated speakers following Spain's King Philippe VI. Now, since Russia's invasion back in 2022, Zelensky has used these speeches to keep global eyes on Ukraine and call out Moscow directly. This year, he's been busy in New York, meeting NATO's Secretary General Mark Rutte and the American Special Envoy on Ukraine, and even Trump himself. He also addressed the UN Secretary Council yesterday, urging China to step in and stop Moscow's invasion. Meanwhile, the Kremlin is fuming over Trump's comment that Ukraine can retake occupied territory. Their response? The idea is deeply mistaken. They doubled down, insisting the invasion is not an aimless war. They also grumbled that normalizing relations with Washington is moving slower than they'd hoped. So Bitcoin traders didn't get their pump, Trump didn't mention crypto, Zelensky's fighting for headlines, and the Kremlin's out here issuing press releases to save face. Welcome to the United Nations, where the speeches are long, the diplomacy is messy, and the only thing truly borderless remains Bitcoin. We're bringing Cedric in. Cedric, traders everywhere were hoping Trump would drop a Bitcoin bombshell at the UN, but got coal over kale instead. Do you think Bitcoin even needs political endorsements anymore, or does this just prove the market's desperate for narrative fuel right now? What do you think?
I don't think Bitcoin needs political endorsements, but I think the market is psychological and sort of reacts to these things. And maybe it was reacting to sort of the Trump hinting at an ongoing, prolonged war here between Ukraine and Russia. He was calling Russia a paper tiger, saying their economy is faltering. And there's probably some truth to that. 3 years of ongoing war and, inflation has been kind of steadfast in the Russian economy as well. And so I'm still trying to read the tea leaves here is, does Ukraine have any chance of regaining ground back? I mean, I don't want this war to go on, but I'm trying to understand what's actually happening on the ground. And but I do think that it seems that these parties want war. Maybe Bitcoin didn't jump or trade higher because they were hoping for peace, or they being traders,
right?
And more clarity and more sort of economic growth through peace. So I'm not. That's kind of my takeaway. It's in this article I'm reading here in Al Jazeera. Last week, Estonia said 3 Russian fighter jets violated its airspace not long after 20 Russian drones entered Poland's airspace, raising fears among Europe's NATO countries of a spillover from the Ukraine war. So NATO's mentioning Article 5, I think Ukraine has been attacking Gazprom's assets in Russia, its oil production capabilities. So this seems to be ongoing. I'm curious to see what Zelensky says. Actually, you guys have brought me back into this story. So.
Yeah. Big picture, do you think traders should even be like hanging on Trump's every speech anyway? Like, it seems like no matter what he says, it is fodder for something. So are we maybe giving him a little too much credit at this point for his ability to move Bitcoin's needle?
I mean, I think still these, traders are still going to react to market-driven events. I do think Trump still has the ability to move the needle from time to time. I don't know if he's always trying to move the needle every time. Yeah, we don't know if he was always trying to move the needle and when he's trying to move the needle. But I definitely think he likes to see the markets react to his words. And I think, sort of traders are kept hostage to that, that paradigm.
Yeah, he's truly like the most, he's the biggest political wild card, or maybe just wild card I've ever seen ever. So you never know what he's going to do or what he's going to say or what his intentions are. And maybe that's the way he intends it. I don't know. But
I think his role is chaos. So. I think his role is chaos agent. And I think as, fiat debases and deteriorates in value, I think politics has to get crazier and crazier. So I think Trump is sort of the beginning of the social media candidates. I mean, we see Milei in Argentina, who is very, with the chainsaws. And so I do think, and if you look at the next generation, whether it's, and I'm not endorsing these people, but just who's on the scene, Candace Owens, Kanye. I mean, these are kind of people who are probably going to take politics in an even more crazier way or maniacal way. So, and it seems to bring out the worst in people, politics, sociopaths. So, yeah. So I think it's going to get crazier and crazier. I think he's sort of, maybe he broke the mold, but I think that's the mold now.
Yeah, he really is kind of like a true agent of chaos. And it's unfortunate we live in this world of chasing headlines because those always make the headlines. So we're always talking about it, but maybe we should give it less attention than it probably deserves. But, what are you going to do? That's the world we live in.
I mean, that's why I like
We
Bitcoin.
got another Trump story. Go ahead.
Yeah, well, let's go to the other Trump story. But I mean, with Bitcoin.
Oh, no. Tell me why you like
day to day or short term, it might react to these things. But long term, it's going to do a block every 10 minutes. And the system and the protocol are extremely consistent. It's people who are sort of volatile. So or even just FOMOing into and out of the asset class. So I think that's sort of why Bitcoin, for me, is a risk-off asset long term. And that's where, over a longer period of time, it'll continue to shine. Even this year, I think it's up 80%. So in the Trump era.
Yeah. Yeah, we could use some more of Bitcoin's predictability in the government a little bit more these days, because I just never know what we're going to wake up to with Don Juan at the podium. But that's part of his charm, I guess. All right, we're going to talk more about him here in this next story, so hang tight, Cedric, because Trump-backed World Liberty Financial is apparently still alive and kicking, despite its token chart looking like a ski slope in Tahoe. And they're now promising the hot new thing, a debit card and a retail app. Can't wait. Because if your dream has always been to swipe a Trump card linked to a stable coin, congratulations, that future is now very soon. Co-founder Zach Folkman dropped this at the Korea Blockchain Week in Seoul and said users will be able to connect the USD1 stablecoin and the World Liberty app directly to Apple Pay, meaning that yes, digital assets for everyday payments, or as it's better known as buying a latte. The retail app will smash together peer-to-peer payments with trading features, because who doesn't want to Venmo a friend for pizza and then short Bitcoin in the same breath? Folkman also swore that they won't launch their own chain. Apparently, they want to be completely agnostic about chains, technology, and distribution platforms, which sounds noble, but also suspiciously like we couldn't build one even if we tried. Now, the World Liberty Financial token itself debuted to a lot of hype. Then, of course, reality set in, and now it's down more than 37% since its launch, currently trading at 20 cents with a market cap of $5.6 billion. Folkman's spin is the value will fluctuate, but this is a marathon, not a sprint, which is basically what every founder says right before investors sprint away. Still, they did approve a governance vote to use all liquidity fees for World Liberty Financial Institution buybacks and burns. So, yeah, lighting tokens on fire in hopes that their value magically rises. On the partnership front, they've been busy. World Liberty Financial signed an MOU with BitThumb. BitThumb's CEO, Li Jae-wan, called it a major step to boost competitiveness and expand globally. In August, they teamed up with HTX for USD1 Points Program, a loyalty initiative built around the USD1 stablecoin. Earlier in May, they partnered with Chainlink to enhance interoperability. They also expanded USD1 to Solana and minted 100 million tokens. So while World Liberty Financial is hemorrhaging value, they're still busy laying bricks for their digital finance empire. Whether it's a palace or a pyramid scheme, I guess only time will tell. Bringing Cedric back. Cedric, World Liberty Financial's token chart looks kind of like a ski slope right now, yet they're hyping a debit card and a retail app. Is this innovation or is just slapping Trump's name on fintech vaporware? Like, what do you make of this?
Well, I think this is what passes as current or modern fintech. I think that's what's going to be, sort of sold as the fintech innovation of this era is going to be stable coins and crypto, no matter how not decentralized it may be. I think that's what they're going to trumpet as their, economic activity. And it seems like, I wonder with the World Liberty Financial token, how much of that crash in price or how much of the value was, obtained or siphoned off by insiders. But, because maybe insiders were able to capture $2, $3, $4, $5 billion in profits, swing trading that sort of pump and dump. But these other products are sort of where the economy, we're skating to where the puck is going. The economy is being driven. We talked earlier about can Trump, move markets. Well, the USD1 coin is already worth $2.7 billion. So they're already making inroads in the stablecoin market. I think that the rails, the Visa, the MasterCard, all these things are going to be built on crypto or some sort of chain of sorts. So they're building a company around where modern fintech is going to be regulated and allowed. So, but at the same time, you could see that it would take probably a decade to siphon off for $3, $4, $5 billion in profits from these entities. So what that might explain sort of the pump and dump nature of the token. But now they're settling down and trying to build some long-term value. You can only pump and dump your tokens so many times, but now they're going to build a company out of the remains, and one that's competing with where the economy's going, and they're already, I think, the 59th largest token, in market cap, the stable coin. I mean, so yeah. So this, I'm not I'd love to hear your thoughts.
I was just going to say, you make a good point with the insider thing. I think we saw that with Trump coin. I forgot what the actual numbers were, but it came out. I think it had a market cap of, it was crazy high. I think it was like 75 billion, crashed way down. And I think I saw some statistics on it. And it was like 12 wallets made several $1 million on it, while 400,000 wallets lost money. So maybe it's kind of like that again.
Well, we also don't know if that was a licensing deal. We don't know who the insiders are on these deals. They're not public, right? We don't know if the Trump family were one of those 12 wallets or not, or maybe they just got some sort of payoff to allow other people to run that coin. So maybe World Liberty Financial is somewhat similar. I'm not sure. I do think that they're trying to build a company of the future. They have insider knowledge about where they're going to try to push the economy and allow the economy to go. It seems quite apparent that they want stable coins to be the future roads of the dollar. I think that's really important to them for several reasons. One, I think it allows the dollar to penetrate economies that it isn't able to right now. And the stable coins are a great customer for U.S. Treasury, short-term U.S. Treasury sales. So, That seems like insider activity, and Trump moving the markets.
Right. And on the stablecoin front, it mentioned that users can link the USD1 stablecoin to Apple Pay now, which is just great. Do you feel like this move actually helps advance Bitcoin adoption at all, or is this just more stablecoin gimmickry dressed up in MAGA branding?
All things lead to stablecoin adoption. I think yes, eventually that as people get onto stablecoins, especially for people who are on the currencies worse than the dollar, that's a step closer to Bitcoin. It's probably safer than whatever currency they're in now, that's worse than the dollar. But it just makes it gets people more familiar with digital assets, and money is pretty much already digital anyway. So I really think it's a bridge to Bitcoin. It will bring people in. It's a Trojan horse for Bitcoin. Stablecoins are a Trojan horse for Bitcoin, but that is more like a 3 to 5 or 10 year sort of time frame. But in the meantime, I think you'll see a lot of companies building or doing a lot of gimmicky things around stablecoins and crypto. But I think stablecoins will be a very important part of the global economy going forward, even if all the gimmicky things around it stay.
Yeah, no, it's certainly seeing more and more like that is going to be the case. And an interesting thing I thought about this World Liberty Financial thing was they're promising P2P payments and trading in the same app. Do you think that's a real use case, or is this just a recipe for, I tried to send my friend pizza money and I accidentally shorted Bitcoin? Like, do we need this?
Well, I think everything is going to centralize, maybe not in a positive way, but so X is going to eventually be, your everything app. At least that's their goal. You'll make your dental appointments on there. You might trade your stocks on there. All of these things can be done with an API from any other database. So, but will Robinhood be able to integrate dental appointments? Probably not. Do you want to trade and do your payments or your Apple Pay on the same app? Maybe not with World Liberty Financial, but maybe in other places. So, they're all going to experiment. I think that's where you're seeing some of the gimmicky stuff and seeing what attracts users, what users care about, how they can maybe change user behavior around the edges. A/B test things. So I think there's learning here, and I think they're experimenting, but not everything will stick.
Yeah, I think there's a place for this. I just don't know if the World Liberty Financial app will be that place for me and many others. But who knows? We'll see. Trump has surprised us before.
Yeah, well, I think the Trump family has experimented around a lot around, trying to brand the new economy, whether it's freedom of speech and social media, FinTwit products, banking. So they're trying. They've had their most success primarily in hard assets like real estate and then licensing. So I think they're used to dabbling and sticking their toe in the water and then seeing what works and going harder at anything that does stick. So as all these companies are going to, especially if we move into a more low interest rate economy.
Yeah, you're totally right. There's one thing that the Trumps are known for is literally trying anything to make money. There's Trump the game. I think there were Trump steaks. There's Trump. It's just Trump labeled everything, and like you said, just kind of see what sticks and then go from there. So I don't know. I respect them trying, but we'll see how it plays out. All right, we got another story we're going to go over here. So hang ten, Cedric. We'll be back in just a second here because Morgan Stanley, the Wall Street behemoth, is teaming up with crypto infrastructure firm Zero Hash. The prize? Letting E-Trade customers finally trade Bitcoin, Ethereum, and Solana. Because nothing screams Main Street adoption like watching your uncle from Ohio log into his dusty E-Trade account and buy Solana. The launch is confirmed, and Bloomberg first reported the news. Crypto trading is expected to begin in the first half of 2026. So yeah, they announced it now, but you'll still have to wait a year to hit the click the buy button. Jed Finn, Morgan Stanley's head of wealth management, told Bloomberg the obvious blockchain-based infrastructure is obviously here to stay. According to him, clients should have access to digitized assets, traditional assets, and crypto all in the same ecosystem that they're used to. Or in other words, let's make Bitcoin look as boring as a mutual fund. Morgan Stanley has been tiptoeing deeper into crypto for years. In January, CEO Ted Pick told CNBC the bank would work with regulators to safely offer services. Last year, they let advisors promote spot Bitcoin ETFs. And back in 2021, they offered wealthy clients access to Bitcoin funds. So if you're rich, they've already been your crypto concierge. Now they're just opening the velvet rope to regular E-Trade plebs. Meanwhile, Robinhood pulled in $160 million in crypto trading revenue in Q2. That's up 98% from last year, even while Trump's global trade war was tanking everything else. Charles Schwab's incoming CEO, Rick Verster, also said they'll jump into spot crypto once regulation clears up. For now, Schwab sticks to ETFs and mutual funds, and in a statement, Zero Hash CEO Edward Woodford gushed that Morgan Stanley's strategic stake proves infrastructure is the key to digital finance. He said the partnership is a major step forward in bringing digital asset technology into the mainstream. Zero Hash CFO Adam Berg added the kicker to this, saying every financial institution wants in. He claims bank CEOs are spending more than half their time on-chain innovation. So even Wall Street lifers are now talking about blockchains instead of golf. And it doesn't stop there either. Morgan Stanley also invested Hashdex's $104 million Series D round. Hashdex has raised $270 million total, with other big names like SoFi, Jump Crypto, and Interactive Brokers piling on in. So while Bitcoin keeps proving itself the hardest money in existence, the suits are finally catching up. When Morgan Stanley brings Bitcoin to E-Trade, the normies will definitely follow. All right, we're bringing Cedric back. Cedric, Morgan Stanley is teaming up with Zero Hash to let E-Trade users trade Bitcoin, ETH, and Solana. Is this real adoption, or just Wall Street finally catching up to what Coinbase kids were doing since 2017?
I think it's both. I think it is real adoption. I mean, people are demanding these products, and these financial giants are going to have to roll them out. So I think that does signal real adoption. Not maybe sort of the ethos of Bitcoin. It's not the adoption around,
Right.
Bitcoin qualities. It's real adoption of Bitcoin price exposure. It remains to be seen. I mean, Morgan Stanley wants to roll out a wallet. I assume that would be a custodial wallet. But maybe they'll prove me wrong. Maybe it'll be a self-custody wallet. But I really think this is about the adoption of Bitcoin as an asset class, as price exposure, as getting alpha in the market, exposure to Bitcoin's volatility, not necessarily sort of the adoption of the ethos of Bitcoin in terms of self-custody or circular economy or privacy or censorship-resistant money or anything like that. But I do think that this will also feed directly into the repeal of SAB 121 and then SAB 122, which is allowing people to use their Bitcoin as collateral when taking out loans. So I think that will primarily, I'm excited about seeing how that affects mortgages in the mortgage market. But that will also, affect how much of their Morgan Stanley's clients can take out in even margin or loans to trade. So it's in their interest for not their clients just to even buy. That's why they probably want to roll out the wallets, not just to for their clients to buy these assets from them, but to house their assets there and be the custodian of these assets, so they can be either traded against or loaned against as well. So they can have all these assets under management.
Mm-hmm. And Morgan Stanley, it was interesting, is they're framing this as bringing digital assets into the same ecosystem that clients are used to. So do you think Bitcoin gets stronger when it's wrapped in this kind of Wall Street packaging, or weaker because it kind of loses its edge, or it kind of goes against the
Bitcoin's
ethos?
Anti-fragile, but I think that this, something that goes against the ethos could have a positive or negative effect. So it could lead to less people self-custodying, but then some of those people who don't self-custody are going to learn the hard way, and some of those people are going to then become advocates of self-custody. So it's hard to really judge the second and third order effects, but I think that I think that it doesn't make it stronger or weaker. What do you think?
I think it makes it stronger. I'm for anything that encourages adoption, because as we've seen, Bitcoin gets stronger when people take the time to learn about it. And anytime something like this pushes Bitcoin more into the mainstream, I think people take notice and are going to be more willing to do that research. But you know, you can only lead a horse to water, and I think we're putting the water a little closer to everyone's faces a little bit when we see things like this happen. So I think it's ultimately good, and I think that, you know, Bitcoin is ultimately going to be a marriage between that ethos that it came with, but also having to kind of make some compromises with traditional finance if we want it to kind of become what we think it can be. But, you know, that's my 2 cents. What do I know? So
there's this push and pull relationship, and I think that we think about it as is traditional finance changing Bitcoin, and I could see how people can get more. They feel like, oh, if the Bitcoin is within this ecosystem of Morgan Stanley, I could be more comfortable with it. And there's probably some, you know, truth to that for certain generations. But where I really think that Morgan Stanley's, the underlying cause for this is their investment, I think, in zero hash. And I think where Bitcoin is going to push traditional finance is towards 24/7 trading. And I think that the first thing that's going to happen, I think they're going to eventually run out 24/5 trading. So the stocks will be traded 24/5. And I think that's where actually Bitcoin is pushing traditional finance more than the other way around. I think in ways that they don't necessarily advertise or speak to, or they're not speaking to here. But I think Morgan Stanley's trying to get out in front of that. Why wouldn't they want trading 24 hours, 5 days a week? Customers, I think, definitely are getting used to that from the Bitcoin ecosystem and the cryptocurrency ecosystem, where you can trade 7 days a week, 24/7. So I think that's what this is really even more about.
That's super interesting. I didn't really consider how Bitcoin could actually be influencing the traditional markets rather than the other way around, which we talk about all the time. So that's a super interesting point of view. I like that. So that's why you got a good podcast, ideas like that. All right, stay tuned here, Cedric. We got another story to talk about. This one's kind of a fun one because somehow, some way, the company that sells teddy bears and tiny outfits has outperformed the hardest money on earth. Well, of course, we're talking about Build-A-Bear. Their stock is up 119% year on year. Bitcoin, a measly 80. So yeah, the teddy bears right now are winning. Build-A-Bear now trades at $71 a share, closing in on a $1 billion market cap. They raked in $252 million in revenue in the first half of this year, up 12% from last, even while tariffs and recession fears crushed other retailers. Their secret weapon? Adult nostalgia. Surveys show 92% of adults still own their childhood teddy bears, meaning the customer base never actually grew up. So Build-A-Bear leaned into it, jacking up prices discreetly and pumping out new products tied to trends. Analysts credit the company for raising prices without killing sales, because apparently nobody blinks when they're buying a plush toy in a Star Wars costume. Meanwhile, Bitcoin still pulled its weight. It's up 80%, trading around 113K currently and sitting on a $2 trillion market cap. That puts it ahead of nearly every other asset except trillion-dollar tech giants. Microsoft is at 3.8 trillion, Nvidia is up 58%, and Oracle crawled to 6%. And Build-A-Bear, well, less than $1 billion, but somehow stealing headlines for beating Bitcoin. If you'd put $1,000 into Build-A-Bear stock just a year ago, you'd have almost $2,200 today. Same bet on Bitcoin, be around $1,800. So yeah, teddy bears outperformed Bitcoin this year. But let's be clear, Build-A-Bear doesn't have a fixed 21 million supply. It doesn't trade 24/7 around the world, and it doesn't react instantly to geopolitical chaos at 2 a.m. on a Sunday. That's Bitcoin's lane. So congrats to Build-A-Bear for the sugar high rally. But when the nostalgia eventually wears off, Bitcoin will still be there, harder, scarcer, and a lot less cuddly. All right, we're bringing Cedric back. Cedric, this is kind of a funny one. Build-A-Bear stock up nearly 120% year on year, outpacing Bitcoin's 80%. Is this just nostalgia-fueled madness, or should Bitcoiners be worried about teddy bears as competition? What do you think?
This is nostalgia-fueled madness. This is like meme stock action. You know, this is a decent business. Build-A-Bear posted a record revenue of $252.6 million in the first half of 2025, which was up nearly 12% from the year before. But the stock is up 80%, 119% compared to Bitcoin being up 80%. So, that's just, the numbers, the fundamentals don't really match up, in my opinion. And it kind of paints, people call Bitcoin tulips, but it's funny. This is sort of like the tulip mania of the current day. These things are, they're in the physical world. You can almost right click save as. They can make as many as they want. They can. There's a lot of people risk in this company, marketing risk, there's fashion and trend risk. But my little girl loves them. She got one, so I kind of get it. We don't buy her that many things, but this is what she asked for, and she got one. So it's all the craze right now. But do you want to buy a stock at its peak, that kind of thing? Or what kind of multiples could it do from here? It's already up 120% on the year, and the sales are only up 12%. So I don't know. It's fun to watch. I think it speaks to the economy, though, and how, outside of a few companies, there's not much to get excited about. So money is chasing alpha, and, liquidity is looking for places to go. This speaks to sort of the malinvestment in the economy and how people are sort of investing based on emotion, and sort of thinking there'll always be a greater fool. There'll always be someone to buy this from me. Someone else would be more excited about this.
People are kind of looking anywhere to stick their money these days, right? I mean, you could stick it in Build-A-Bears. I mean, like trading cards, shoes. So people are, distrustful of a lot of the more traditional avenues out there. And I guess Build-A-Bears is one of these more atypical investments you could make. By the way, your daughter, you said she got one. Did you at least get her a Bitcoin Build-A-Bear? And if not, will you?
I wasn't involved in this. I don't know if I would have approved. She got one, and at some point, I came home with it. It was all she was talking about. I don't even know who got it for. I don't know, it's grandma or what. But she gets a lot of toys. It's around her birthday. So, but I think this was the one that she was really. I mean, she didn't get a lot of toys from us, but around her birthday, she got a lot of toys. But this was what she was really clamoring for, if I remember correctly. And so I get the craze. I remember, growing up, people going crazy for Cabbage Patch dolls. When Nintendo came out, or Sega Genesis, different platforms. Now I think the Switch 2 just came out. I sort of get, trends and the craze around this. NVIDIA, is up 58% this year. Microsoft's up 19%, and Oracle's up just 6%. So people are really looking for alpha anywhere they can get it. But I don't think that Build-A-Bear is a hard asset.
No, I would concur, but it sure is sweet and cuddly though. So I guess I get the appeal a little bit.
You could probably trade 24/7 though. The Build-A-Bear.
Right, that's right. One Build-A-Bear for a little the other, some cash here and there. Yeah, a lot to be excited about in the whole Build-A-Bear community. I got to get back into it. It's been a minute. So Cedric, where we're at the point of the show now is we've been playing a fun game with all of our amazing guests. We are playing kind of a Price is Right style game. As we know, this year in Bitcoin has been an unusual one in both good and bad ways. And everyone's wanting to know, where is Bitcoin ultimately going to end up price-wise by the end of 2025? So let's bring up the leaderboard, guys, and go to camera 3 really quick. So what we have here is our current leaderboard of all the predictions we've gotten from previous guests so far. So you can see the high mark we have currently is Knut Svanholm. His is around 443,000. I'm really hoping he's the one that's right. I tend to go on the more conservative end. I'm around 142. For fun and games, where do you think Bitcoin is going to be December 31st, 2025, when that clock strikes midnight? Because whoever gets closest, I'm sending a Roxom Patagonia to. So what do you think?
All right, not financial advice, but for S's and giggles, I'm going to shatter the leaderboard and go with 475,000. That's what Dr. Jeff Ross was calling for a year ago. That's what I thought things would happen. I'm not going to back off. I think the probability is extremely low, but I'm going to take number one and go with 475,000.
I love it. We got a new leader atop the board. So we got 475 for Cedric. So Cedric, what do you think is going to happen, or what would have to happen for us to get to that price? Is it M2 money supplies going wild? Are we going to need to see some big kind of government news come out? What do you think would have to happen realistically for us to scale up almost 300 grand here in the last quarter of the year?
Yeah, I think they have to set the table for the stable coins. I think that's what they are been holding the whole thing back for. And I think it was the SEC just came out today and they were like, we're just going to kind of like, everything's really going to be soft through the end of the year. You could launch anything that you want, and we're not really going to go after you too hard. I think they're really trying to lower the bar to allow everyone to play on the field. So it's going to take some sort of, but beyond that, I don't think that's the spark. There's going to need to be a spark, some sort of FOMO-esque environment. It would probably be around corporate treasuries. So I think the MNAV needs on the corporate treasuries, the Bitcoin core treasury companies probably needs to go way above 1 or 2 or 3 or 4 or 5, especially on these smaller ones. People need to get really, FOMO-esque level excitement around the securities aspect or, these treasury companies of Bitcoin. And I think that would drive, that style, that price movement.
Do you think a catalyst could be like if a company, like a Mag 7 company, like Google, for instance, came out and said, hey, we're going to actively start our own Bitcoin reserve? Do you think something like that could maybe start more of an institutional arms race, even more so than what we're seeing currently, and that could maybe propel the price?
To the table. Fiat's working right now. Especially the ones that are doing better this year than the others. I think it's the worst companies that are performing the worst are going to come to Bitcoin. But yeah, I mean, maybe that's the unforeseen catalyst. Maybe Amazon rolls out payments with some sort of Bitcoin wallet, But even something like that, unless they've been working on this in the background, you see with companies like Morgan Stanley, it takes a while to roll these things out. So maybe it would be an announcement, but it'd be a while before we see that sort of thing in play. I can't imagine what it would be. But I think what kind of event would drive that kind of price action? But yeah, I don't think it's going to be the FANG or the Mag 7. So but we'll see. Maybe I'll have to think about that.
We'll see. I'm hoping maybe Amazon's been working on Bitcoin payments on the sneak or something, and they just dropped that on us. I think you mentioned Amazon. That could be a pretty big needle mover, but we'll see.
Apple
necessarily Nostradamus.
Yeah, self-custody wallet on the Apple phone would be awesome, and I think a no-brainer for Apple. And I'm kind of I would have liked. I think in the earlier days, I think 3 or 5 or 4 years ago, I think these bigger companies had much more room to play with those things, and I was surprised Apple didn't earlier. I see the likelihood as I see less experimentation from the biggest companies in around Bitcoin right now in the current environment. I think there's more risk in a way, and they would probably move slower and come slower. So we'll see.
Right. Yeah, we'll see. In the meantime, though, I know before we let you go, Cedric, you've got some exciting news on your end. Of course, you're the host of the incredible Bitcoin Matrix podcast. But I heard recently from a little bird, if someone at home wants a little slice of that podcast of their own, they can wear it. So tell us about that. What's going on?
Yeah, I'm super excited. We're rolling out the show and the merch for the Bitcoin Matrix. I'm wearing one of the shirts. This is my Bitcoin shirt. You can get the, Bitcoin Against the Machine. We got 3 versions of those. Cash is Trash. We got a beanie. We got a Sailor-esque one with the Bitcoin Matrix logo. We got a couple of mugs. They're as is for now. Everything's sort of a soft launch, but you can support me in the show. You can go to thebitcoinmatrix.com and go to the merch section. These just went live, so you guys are the first to know.
Very cool.
We'll also be at Bitcoin Center tonight, our live show. So 8 p.m. It's usually on Tuesdays at 8 p.m., but I was a little under the weather yesterday, so we're doing it tonight. That's the YouTube channel.
Amazing.
Please subscribe. We got over 10,000 subscribers now. Please check it out. We got over 240 long-form interviews with Bitcoiners and lots of interesting people that look through the world sort of through a Bitcoin lens. And, we just talk to truth seekers and try to find the best ideas on earth and bring them to the audience.
We love that. And that's why your podcast is so great and doing so well. And we love the truth seekers and interesting people like yourself taking the time to join us here on the Blockchain Report, Cedric. So I got to say, as always, thank you so much for your time. It's always great to have you, your insight and expertise here with us on the show. And we thank you so much for stopping by today. It's been always a lot of fun having you on.
It's always great catching up with you. Love the show.
Love it. Pleasure's all mine, and we'll see you next time, Cedric, and hopefully I'll be putting a nice Roxom Patagonia over your shoulders, buddy. All right, we're taking a quick break here at the Blockchain Report. When we're back, we got more news coming your way, and then we'll be wrapping things up for the day with a little bullish, bearish, or BS in just a bit. But stay tuned, more Blockchain Report coming your way after this.
Oh, it's beautiful, Hank. This is not financial advice.
All right, and we're back, and we're joined by our crypto wunderkind, Luca Pagano, to help us read the charts. Luca, how are you? Always great to have you back on the show.
Hank, how's it going? It's a pleasure to be here, you know.
Oh, the pleasure is all ours, Luca. So we want to talk charts right now. Currently, Bitcoin's hanging around the mid 113s. We're waiting for that next big pump up. I think we went back as high as 117s recently, but we can't seem to get back to that 120 level. So what are you seeing right now in the charts? September's been a little better than normally it is. Like, how are things looking as we head into October, as the kids call it?
Yeah, exactly. I mean, for me, Hank, you know, we've been analyzing it together here in the month. For me, September was a boring month, and it sort of was, you know, because basically the most important thing for me happened at the end of August or beginning of September, you know, which was this rounding bottom. For me, it was beautiful. You have like a round figure happening at the lows or at the previous high range right now, you know, that marked for me the new lows of this new range. You know, markets move 75% of the time, and they move on ranges. So we gotta accept that as it is. So for me, you know, this was the confirmation of the low range of this new range, right? Which is beautiful. You know, if we could range a little bit between 110 and 125, that is amazing. You know, so basically, this day actually was very important for me, and is very important for me, the closing, because you have this test. This pullback into what is now confirmed as range close, and we're reacting pretty nicely today. You know, we're 1.5% up, more or less, on BTC, which for me it's key because we gotta hold this level. You know, $111,000, $110,000, you gotta hold it, because if not, we would lose momentum on this new range, and we would probably go testing lower prices, right?
And something we talk about a lot on the show, Luca, is closing out the week with a certain amount of momentum heading into the weekend, where we could hopefully see some new big numbers come our way. So right now we're around 113.5. What is the number you're looking at for us to close by the end of the week to kind of help reaffirm that things are back on the upswing again?
Yeah, that's an excellent question, Hank, because I think, you know, for us to confirm momentum, we gotta go up a few points back. You know, last week we marked the midpoint of the range, which is more or less mid $116,000. So for me, it would be lovely to close right above this area, because if we go real quick to the weekly here, we got a pretty interesting rejection on the mid price, right? And we're trying to recover to this, you know, momentum shift, let's say, on the weekly candles. So for me, a test of the low range and a close above 116 mid $1,000, for me, would be the nicest thing we can see heading into the new highs. You know, that's the idea.
Okay, so 116 is what we should be looking at as we make our way toward the weekend. Now, on the Ethereum side of things, Luca, What are you seeing right now? Ethereum's been kind of weird. We've been stuck, I feel like, between 4,100 and that new all-time high, which I think was right around 49, but we can't seem to break out. So what are you seeing in regards to what Ethereum is up to, and how is Ethereum stacking up to Bitcoin's dominance percentage right now that we often talk about here on the show?
That's definitely the tricky side of things, Hank, because I think Ethereum lost a little bit of momentum on what we're talking, right? You know, we have like on Ethereum, it's honestly very easy to analyze for me Ethereum because it's so clean right now. Because if you see the weekly chart, basically what we've ranged since probably March of 24 or something, you know, we've broken out that range on the weekly, which is amazing, but we've rejected the high of the 2022, right? So basically what we should definitely not lose is $4,000. That's a psychological level, as we always speak, Hank. That's an important level for the structure as well, you know, so that is very important. When we go down in the daily, you know, remember we marked this rounding bottom and coming into demand, which was honestly beautiful. Also, it pulled, it pushed very hard, but now it lost momentum, right? Because, I mean, you don't want the weekly to close like on 4K, like, because that would indicate not too much bid, or bids are quite exhausted, you know? So what you want to see ideally is closing the week above like 4,300. That would be for me the nicest, because that would be a rejection of the 4Ks in bullish terms, you know, and an expectation to test again those highs on almost 5K, you know. That would be at least my view on it.
Okay, so the numbers to look for as we close out the week: Bitcoin 116, Ethereum around 4,300. If we hit those as we head into the weekend, we could see some more upside as a continuation of some positive momentum up and to the right. So that's what we like to hear. All right, Luca, as always, I want to thank you so much for taking the time to stop in and help us read those charts today. It's always a pleasure. And for those in our audience that haven't gotten enough of you yet and they want more chart analysis, what's the best place for me to send them?
Yeah, I mean, let's see the week close. Look at Roxom, and Hank, you know, I love being here. I'll keep on watching the show, so thank you for having me.
Pleasure's all mine. All right, thanks, Luca. We'll see you next time. And here at the Blockchain Report, we got one more story to go over, so let's run that bull run stinger and get to it. No stinger. We're just going into the story. It's a live show, guys. You know how it is. All right, so last story of the day, gang, of course, is taking place in the wonderful world of Washington, D.C. And they woke up to a brand new statue at the National Mall. It's bronze, it's spray painted, and it's titled Best Friends Forever. And yes, it shows President Donald Trump holding hands with Jeffrey Epstein, because apparently Mount Rushmore is all full. The anonymous art collective behind this thing is on an absolute tear. They've done dictator approved, another Trump statue endorsed by Putin, Orban, Bolsonaro, and Kim Jong-un. They did Pelosi's desk, which had a pile of fake poop on it. And now they've given us a Trump and Epstein statue, forever cast in bronze like the world's most uncomfortable prom photo. The plaque reads, "We celebrate the long-lasting bond between President Donald J. Trump and his closest friend, Jeffrey Epstein," which is basically trolling with a metal chisel. The Park Service even issued a permit so the statue can hang out until Sunday at 8 p.m. or until someone calls the world's biggest tow truck. The backstory here is Trump and Epstein were neighbors in Florida back in the 1980s. Trump flew Epstein's jet a few times. They showed up at parties together. In 2004, a real estate fight ended the bromance. And when Epstein was arrested in 2019, Trump claimed he hadn't spoken to him in 15 years and wasn't a fan. Fast forward to this summer, and Trump sues the Wall Street Journal's parent company for a libel after they reported he once gave Epstein a drawing of a naked woman as a birthday present. There it is. Now, the White House wasted no time blasting the statue. Spokesperson Abigail Jackson said liberals are free to waste their money however they see
You are
fit,
fake news.
But it's not news that Epstein knew. Hey, get out of here. But it's not news that Epstein knew Donald Trump, because Donald Trump kicked Epstein out of his club for being a creep. In other words, don't blame us, blame the creepy neighbor. Tourists on the mall took photos, runners stopped mid-jog, and one guy walking his Yorkie said it's a reminder that freedom of speech still exists and that Trump's legacy will always include Epstein. So whether you think it's art, protest, or the worst buddy comedy poster of all time, the statue is there, hand-holding and all. And unlike Epstein, this one isn't going away anywhere on Sunday. All right, we're taking a break. When we're back, we're going to wrap things up with a little bullish bearish or BS. Stay tuned. We'll be back after this.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Are you interested in effortlessly growing your Bitcoin portfolio? I sure am. The Bitcoin credit card by Gemini earns you Bitcoin back on every purchase. Use it like any credit card. Buy lunch, gas, or your weekly groceries, and you'll earn up to 4% back instantly in Bitcoin or one of over 50 other cryptos straight to your account. All that with no annual fee, and right now you can grab a $200 Bitcoin welcome bonus. It's the easiest way to start building your Bitcoin stack. Just go to Gemini.com to learn more. All right, it's time to wrap things up today with a little bullish bearish or BS. Let's see how things are looking for Bitcoin after recapping our top stories here. First up, an anonymous art collective installed a bronze statue of Donald Trump holding hands with Jeffrey Epstein right in front of the U.S. Capitol, complete with a plaque trolling their long-lasting bond. It has a permit to stay until Sunday, and the White House already blasted it. I'm calling BS on this. This is pure political trolling dressed up as art. Is it funny? Absolutely. Is it market moving? No. The Bitcoin price isn't going to budge because tourists took selfies with a bronze Epstein prom photo. So I'm calling BS on this. Statues are fun, but they don't move markets, so it's BS. Next up, the company selling teddy bears in costumes is up 119% year on year, while Bitcoin is only up 80%. Analysts say nostalgia is driving sales for Build-A-Bear, proving adults will pay anything for plush toys. I'm calling BS on this. I mean, it's a fun headline, but Bitcoin's $1 trillion market cap and 24/7 global liquidity don't exactly compare to Build-A-Bear's $1 billion sugar rush. The Bitcoin price won't care that teddy bears are having a moment, so I'm calling BS on this. Bears are up, but not those bears. But it's fun. All right, last but not least, we have SEC Chair Paul Atkins says the agency will roll out an innovation exemption by year's end, letting new crypto products hit the market faster. The SEC is even hosting a roundtable with the CFTC next week. Ooh, I'm calling bullish on this one, baby. If the SEC actually follows through, it means faster approvals, more liquidity, and fewer years wasted in regulatory purgatory. That directly improves the pipeline for Bitcoin-related products, good for adoption and long-term price action. So I'm calling bullish because faster approvals equals faster money. All right, today's scorecard, we got 1 bullish, 2 BS, which means today was just a whole load of bull, unfortunately. Because when the biggest headline is a trolling statue and the second is teddy bears beating Bitcoin, it's hard to call today's news market signal. The only real substance is the SEC is hinting at finally speeding up crypto approvals, but 1 bullish headline can outweigh 2 total sideshows. So that's why today's diagnosis is firmly BS. Well, that's it, boys and girls, for today's show. As always, thanks for tuning in to the Blockchain Report. Before you leave, don't forget, please like and subscribe to RoxomTV and me at Hank at RoxomTV on all platforms. And I will see you all here tomorrow, same time and place, at the Blockchain Report. Until then, stay safe, stay informed, and always, hodl on. See you tomorrow.